You know, most traders think that you need a completely different strategy if you want to trade shorter time frames. No, you don't. One of the core patterns that we've been teaching for years in swing trading works just as well on a 15-minute chart, provided, big if here, provided you apply the rules correctly. And although there are a few kind of, there are important nuances to the way that I trade shorter term, the basic pattern is identical. No change. You can use this pattern on any style of trading. So in today's video, I'm going to walk you through a real trade from start to finish, showing you the identical swing break concept that can produce an excellent reward to risk opportunity using a very small stop loss. Now, before we get started, you need to know that this is not about finding more trades or trading all day long. Not at all. That's not it. It's about waiting for one very specific setup at a very specific location with very specific rules, and then letting the probabilities do the work. Okay, so let's jump into the charts. So this video is being recorded on July the 1st because I'm away that whole week ending July the 10th, so I recorded this in advance. But it doesn't matter. I've recorded tons of these trades, and it's the concept that I want to get across. So as you can see, price has already moved into an area of major support and resistance. That's this red line. In fact, this is a daily chart up here. You can see this level here. That's one that we would pay attention to. On the 4-hour chart, which is one that we really pay a lot of attention to, this level is pretty obvious. That was support. Price broke it, went up, or probably held and went up, broke it down. And this, you want to watch these to see if there's a reaction here. Okay. Nothing happens until price reaches this resistance level. That is important because most retail traders are trying to create trades where institutions are simply not interested. They're trying to create something out of nothing, maybe out of boredom, whatever it is. We are only interested in areas where we know there's a much higher probability of institutional order flows, and we would expect some possible price activity there. Now, once price reaches this level, this red line, we wait. There's nothing to do. There's absolutely no predicting, no guessing, no anticipation. The market needs to prove itself first, and that's where the swing break pattern comes in. And that's the beauty of just knowing, having a system of trading. You have to stop guessing, especially if you're a short-term trader. It's very tempting to be doing things that you know you shouldn't be doing because you have no game plan. This is where the price swing is created right here, and now we're simply waiting for that swing to break according to the rules. See how price goes up and hits this red line? As it went up in these waves, or swing breaks or waves, whatever you want to call them, it goes up and down and up and down and up, higher highs again, keeps making higher highs. That's why I drew this line, just to show you. And then it does this. It takes out all these lows. This is the one that was really important, but it took all these other ones out too. Very, very strong move down. Great opportunity when that happens. And this trade, this is what sets the trade up. Okay. Now, we're waiting. Once this swing gets broken here, and everything is also set up according to the rules, and I have very, very specific rules about how to trade these. Once that happens, we have objective confirmation that momentum is beginning to shift. That is our trigger. Notice something else. By the way, I always liked, on these short-term trades, I like these 79% retracement levels from high to low. The reason is because it allows me to have very, very small pip risk, and I can get a one-to-one reward risk really easily, which is what I always want to see if I can get that for sure and beyond. And now it's possible that price only comes up to 38 or 50 or 62% and goes down, and I missed a trade. I'm okay with that, but that's the way I do these. And so the point I was going to make is when you're selling up here, you've got a super small stop loss, because if it breaks this high, I don't want to be in this trade anymore. This didn't even need a 10 pip risk, but I don't do less than 10 pips. 10 pip risk on this trade. And I tell you, I've got a lot of these kind of trades that have happened. I've been seeing these for 20 years now. So these 10 pip risks are 11 or 12. They work very, very well when they're set up properly. Okay. There's really specific rules, but This is one of the biggest advantages of this kind of style of trading. We're not risking, 70 or 80 or 100 pips or more like you have to do with swing trading, which is the way, that's just the way you have to do it with the higher time frames. So it's only a fraction of that. Now, it doesn't mean that the trade's easier or anything. The rules still have to be followed exactly. But when you keep the risk small while maintaining realistic profit targets, your reward to risk ratio naturally becomes very, very attractive. That's, one of the reasons this approach can work particularly well for traders with smaller accounts. Very attractive for that. Now, another misconception is, just stand by one sec. Sorry, and is that short-term trading means sitting in front of your computer all day long? No, it doesn't. Okay, we only trade at predetermined support. This red line here, we knew this way in advance. We're not even interested in all in here. This is only where we're interested, right? Price has got to come to us. And so we already know where we're going to be looking to get a trade. So you set an alert up there. If the alert never goes off, enjoy your day. Go golfing, have a sleep, I don't know, do something else. If it does go off, all right, then that's when you want to start to pay attention to what's going on and look for this pattern in here. So that's basically the setup in here, and I just wanted to show you that this pattern, this swing break pattern, is a very, very powerful pattern on whatever trading style you're using. The trade management down here is very important. This trade actually, right into here, got a 1-to-1 reward risk. That's pretty nice. You're not waiting around very long. Still going down. By the way, we're getting close to rollover now as I'm recording this. You don't want to be in these little trades in rollover because the increase in pip spread during rollover could stop you out, just that alone. So they're not designed for holding a long time. You can usually get your profit in and out in a few hours, that kind of a thing. It varies, but that's it. Every decision, though, follows a predefined rule. Nothing that we're doing here is subjective. And I won't say trading, it's 100% objective, but boy, it's pretty close to it. And that makes things a lot easier. Okay, that consistency is what removes so much of the emotion from trading. So hopefully this gives you a different perspective on short-term trading. The time frame isn't what creates the edge. Okay, the edge comes from applying a proven pattern at high probability institutional levels with consistent rules, disciplined execution. That is critical. So whether you're trading a daily chart, a 4-hour chart, a 15-minute chart, whatever it is, those principles don't change, right? So yeah, if you'd like to see more examples of this style of trading, let me know in the comments below. I'd be happy to do that, because if enough people are interested, I may start sharing more content on this approach in future videos, right? So if you enjoyed this breakdown, hit the like button, subscribe if you haven't already, and I will see you in the next video. Have a great weekend. Take care.